Question of the week is, how much money do I need to purchase whole life insurance? Life insurance is based on three factors: age, sex, and health. So the amount of money a 20-year-old man would need to purchase life insurance is going to be very different than the amount of money a 50-year-old man would need to purchase life insurance. Also, rates for men and women vary. So in most states, rates for women are lower than the rates for men. And then there's the health factor. So people who are in better than average health will pay less than someone who's in average health. And people who are in less than average health will pay more than someone who is in average health. So all of those factors combined, we can see that it's very easy to set specific policies for an individual who we know their age, we know their sex, we know what their health is, and it would be very easy for us to say this is the amount of money that you would need to buy this policy. But if we're generalizing, it becomes nearly impossible to say how much money you need to buy life insurance. That's where the 10-20-70 principle comes in. The 10-20-70 principle says that 10% of everything you make is yours to keep. Then there's 20% that should go towards paying off debt or managing debt. And the 70% of your income is what you live on, so for lifestyle. So for 10% of your income, this is money that you should be keeping. And when we keep money, it's different than saving money. So when you keep money, you want to keep it somewhere where it's got guaranteed growth, it's available so you can access it if you need to, it's manageable so that you can use it when you want to, and it builds equity. And there's no place that we know of that does this quite as well as whole life insurance. It's easy for us to say 10-20-70, apply that principle to your income. 10% of your income is a very good starting spot to know how much money you need to purchase life insurance. There's two other questions that you want to ask yourself. Figure out what 10% of your income is, and then ask yourself, is that going to be affordable for me? If it's not affordable, then you won't be able to sustain the policy. And then the second question to ask yourself is, 10% of my income comfortable for me to pay? If it's not affordable, you can't do it. And if it's not comfortable, you won't want to do it. And so those are the two key factors. 10% of your income, that's a good starting spot. Then the two questions: is it comfortable for me? Is it affordable for me? You never want to buy a policy that's not comfortable and affordable from the start, because you won't be able to sustain it, and then you won't be able to reap those benefits later down the road. So 10-20-70, that's a great principle to start with. Of course, there are parameters within this 10-20-70 principle that you can apply. Maybe you don't have debt, and so you want to move over and do 30% of your income in a policy. That's perfectly fine. Maybe 10% isn't quite comfortable and you want to do a little bit less. Totally up to you. But this is a good rule of thumb and a good place to start. If you have questions about getting a whole life insurance policy, maybe you know what 10% of your income is and you'd like to put that into whole life insurance, make sure to give us a call. We can design these policies for you. We can help you to figure out what is comfortable and affordable for you. The number 702-660-7000. You can also email us if you have a life insurance policy that you would like us to review. Maybe you want to add on some additional policies. Let us know. It'll be our pleasure to assist you.